Etsy shares are down 10+% after the company released its quarterly earnings after the bell last night. Although this earnings and revenue topped analyst expectations, the company's guidance for the third quarter was lighter than expected. So, why is the third quarter guidance lighter than expected? Let's get into a quick article before we analyze the charts. This article is coming from Yahoo Finance by way of Reuters. Etsy forecasts downbeat third quarter as demand softens. So, inflation has been up the last 12 or so months, which means that things cost more, which means that everyone has to pay for the essentials and not pay for discretionary products. So, in essence, a rise in prices of essential goods have forced consumers to cut back on spending on discretionary items, which include higher margin home furnishing goods and personalized products and gifts sold on Etsy marketplace. Now, for those who don't remember, Etsy was a pandemic darling. That's when a lot of folks who couldn't work created their own items and sold them on Etsy. We saw a plethora of businesses and individuals selling masks in different shapes, sizes, colors, designs, etc., etc. So in any event, this has taken the sheen of Etsy's gains during the COVID era when consumers with disposable income splurged on decor and other discretionary products. During that time as well, there was helicopter money, and more helicopter money came almost it appeared like each month in the middle of 2020. Consumers continue to make very tough choices on where and how to spend their money, and we're fighting hard to help our sellers get their share, Etsy CEO Joshua Silverman said on a call with investors. The company also said the return of student loan payment in the fall in the United States is dwindling savings for consumers might further curtail discretionary spending and weigh on sales for Etsy. So the Feds put a pause on student loan payments up until this past fall, and that was part of the debt ceiling agreement that was approved earlier this year. Many are saying that the start of student loan payments is going to curtail, stock market gains, as 2/3 of GDP is based on consumer spending. Nevertheless, let's get into the analysis on Etsy. If we go to the monthly chart, we can see the most recent highs at about 150, and we're going to say the most recent lows are roughly $67. And this is kind of like the football analogy. This is one side of the end zone. This is another side of the end zone. And the 50-yard line, let's just put a line. That is fair value. So the extremes, where the sellers outbid the buyers, and at the other extreme, you have the buyers outbidding the sellers. Again, the 50-yard line is equilibrium where the sellers and the buyers are equal. Okay, so let's go down to the weekly chart. And based on the moving averages, although on the monthly chart it was sideways, we have a downward bias based on the moving averages. As you can see, price did pull back, and the dynamic 26 weekly moving average served as resistance. All right, so I'm going to draw a little box around this range bound price action, and we could also see that we had some resistance due to support. All right, so the chart suggests that if we get a close below 80, price could head back down to the mid $66 range. Let's go to the daily chart, and this is where you can see the sell-off. Nevertheless, this range-bound price action still was below the 200-day moving average, which is a huge secular headwind for price. Now, when I look at price, I'm going to scroll to the left and down to see if there's any levels of interest. There might have been one right here, which reacted. And I don't see any levels of interest. Again, on a macro level, going back to the weekly chart, again, if we close this below the $80 level on the weekly chart, price is going to continue to decline. However, buyers can step in at the $70 level. Thanks for watching. Subscribe. Please like the video.